Ever wondered how billionaires dodge taxes legally while you're out here sweating over your paycheck? Tax-free borrowing. Here's the flex. Rather than cashing out stocks or real estate, billionaires pull the classic move: they borrow against them. Say you're sitting on $100 million in stock. Selling it? Boom, $20 million straight to taxes. But if you snag a $50 million loan using that stock as backup, you walk away with the cash and owe zero taxes. Why? Because a loan ain't income. You're still holding onto the stock, and it keeps stacking value. And the cherry on top? The loan interest might even be tax deductible. So, what's the downside? If your stock tanks, the bank might hit you with a your collateral's weak moment. That's a margin call. You gotta either inject more cash or sell off shares. But billionaires? They play it smart. They only borrow a fraction of the stock's value to dodge the risk of being forced to sell. Real estate hacks equals cheat codes unlocked. First up, depreciation. Even if your building's value is mooning, the gov pretends it's losing value over time. That fake loss equals real tax deductions. Next, 1031 exchange. Sell a property? Buy another fast enough, and you pay zero tax on that profit. Just keep leveling up, tax-free. And third, cost segregation. Break your property down: roof, carpet, wires, and claim those bits lose value faster. Boom, massive write-offs now, not in 30 years. Mix all that together, and yeah, you can be rolling in rent money and still show a loss on paper. Charity, but make it billionaire coded. Rich folks don't just give away cash. Nah, they build their own charity setup. Either a donor-advised fund or a private foundation. Then they toss in stocks or real estate, claiming major tax breaks instantly. Here's the kicker: that money doesn't have to leave the fund anytime soon. It just chills. They still call the shots: how much, where, or even if it gets donated. And sometimes, they cut themselves or fam a paycheck for running it. Charity, but strictly on their terms. Stock option life hack. Tech billionaires? They're not clocking in for a paycheck. They get equity shares in their own companies. And equity isn't taxed until it's sold. So, they either hold on to it or pull that tax-free borrowing move again. Live baller lifestyles, no income tax. Even when they do sell, they dodge taxes by relocating to states with chill tax rates. Clean exit. Tax loss harvesting, like deleting L's with W's. You bagged $1 million in profit from Apple stock? Congrats, but the IRS wants their slice. Now say you've got another stock that tanked and lost you $1 million. Sell both. The profit and the loss cancel each other out. Zero taxes owed. This is called tax loss harvesting. Wealthy folks don't wait till December to play this. They've got algorithms scanning their portfolio 24/7. If something dips hard, auto-sell, lock in that loss, and offset gains. Later, they can rebuy it or flip that cash elsewhere. It's like having a robo-assistant trimming your tax bill every single day. LLC spiderweb. Imagine not owning anything yourself: your car, your house, your biz. Everything sits under LLCs. One LLC owns the car, another owns your home, another runs your side hustle. Money moves through these companies, and each one claims write-offs: travel, dinners, gear, home office, you name it. That shrinks your taxable income. And if someone tries to sue, good luck. Your name's not tied to the assets. You just use the car. You stay in the house. But technically, your LLCs own it all. It's 100% legal if you play by the book. Dynasty trust equals generational armor. Most people leave their fortune to their kids and get slammed with estate tax. The more you leave, the more the gov takes. Rich families, they go dynasty trust. While still alive, they drop cash, property, or stock into the trust. Once it's locked in, it's out of reach for the IRS even when passed down. It rolls from your kids to their kids to their kids. You can even set conditions: pay only if they're in school or release funds when they hit 30. It's like programming your legacy. Offshore shuffle equals move in silence. Got a chest of gold? Leave it in your backyard, and your local tax lord will raid it. So what do billionaires do? They ship that chest to an island where the taxman looks the other way, aka tax havens. Cayman Islands, Bermuda, Switzerland. they've got low taxes, and they're chill about questions. And it's not in their name, it's under a shell company. Technically, they don't own the money anymore, the shell does. But since they control the shell, they still run the show. Some even switch residency on paper to that island, even if they live in the US. It's a legal play, but yeah, it takes lawyers, loopholes, and a roadmap. Delaware plus Wyoming equals the cloak of invisibility. You walk through a town, everything's labeled private. No names, no faces, no trace. That's Delaware and Wyoming for rich folks. These states let you form LLCs without your name ever showing up. Buy a house? It's under the LLC. Same with your car, business, or art collection. If someone comes for your stuff in a lawsuit, there's no paper trail. They can't touch what they can't prove you own. And it gets crazier, stack one LLC inside another. Now you've got a legal maze no one can solve. It's not shady, it's just legally invisible. Insurance wrapper equals your money's force field. Imagine a magic vault where your cash grows tax-free and no one can touch it, not even Uncle Sam. That vault? It's life insurance but the elite version, PPLI private placement life insurance. It's life insurance, but you stuff it with investments, stocks, hedge funds, even real estate. Inside the wrapper. It grows tax-free. Sell stuff inside? No taxes. Pass it to your fam when you die? Still tax-free. No capital gains. No estate tax. No income tax. Just a mega payout. It's totally legal, but pricey to set up. Only the ultra-rich can play this game. But when they do, it's one of the most powerful tax dodges ever. Final truth, you're not broke, you're just not using billionaire settings yet.